Record. All right. Thank you all for joining me today. I've got John Duffy, who's a Certified Divorce Financial Analyst, or CDFA, as you might hear him and I refer to today, because I find that we'll shorten that. John is the owner of Zen Divorce Solutions, and we're going to talk today more about how a CDFA is useful, and kind of talk about the use of CDFA for financial information in mediation, as well as other potential situations. But first off, I'm going to give John the chance to introduce themselves and tell you more about himself.
Well, thank you, Amanda, and hello. Like Amanda said, my name is John Duffy. I started Zen Divorce Solutions just to really help. I found that there is just a need for a financial neutral in a lot of situations. We'll get more into that a little bit later. But my background prior to that, and concurrently, I work as well as a financial advisor and financial planner. And I've been doing that for about the last 14 years now. So using that financial background has been helpful for my work as a CDFA, and definitely let's shorten that because the rest of it's a mouthful. But the CDFA is definitely some specialized training, really, as it pertains to divorce, and it's a necessary. Well, what I would say is a financial advisor can't really do the same work as a certified divorce financial analyst.
Yeah, I think that's a really great point, John, because oftentimes I have clients that come to me and say, well, we have a financial planner, we have our financial advisor. And, sometimes they're going to have that knowledge to be able to help them through the divorce process. But I find that a lot of times they're not. Can you explain a little bit more kind of why that is, and what is the education and knowledge that, actually I am a CDFA as well. And so what is kind of that education and knowledge that we have that is different from just somebody who does financial planning normally, but might not in divorce?
Yeah. So kind of traditional financial planning, whether you're a CFP or utilizing any of the, multitudes of financial planning software platforms out there, it's going to be focused on goals by and large, or cash flow. So you're really approaching it from a perspective of, this is what I want to accomplish. This is kind of the time horizon that I have, and this is the money that I have. Am I going to make it? A certified divorce financial analyst uses a very different set of tools. What we're looking at is income and expenses. Those are going to help determine support levels, and that's something that we can help with. There's also then assets and liabilities that we're taking into account, and that's going to go towards the division of assets later, and trying to find the fairest, most balanced way to do that. That ideally leaves both parties in good shape and still making money and increasing their wealth over time, as opposed to continually every year, dipping into their savings more and more until they're in bad shape. And there are a lot of tools that projections and things that can help identify some maybe scenarios during that divorce that wouldn't be great for one or both parties, really. Mm-hmm. I think as well, a financial advisor, very often the relationship is more strong with one of the spouses. Normally, there's one spouse that has a lot of the financial knowledge. They have the relationship with the financial advisor, and their spouse may not even go to the meetings. May have, for whatever reason, because they don't have an interest, because they feel overwhelmed, because they just don't feel like they know what to ask or say. They've kind of opted out of that relationship. You can just have some inherent conflicts of interest if a financial advisor is the person who's working with the couple, trying to help them divide assets. They don't have the specialized training, and they also want to try to keep the assets there. So they might have a little bit more of a bias to the person that they have a better relationship with.
Yeah, I think that's a really good point. And I think one of the things too is, first off, what you said about kind of one person having that relationship, I find that that's often, and even if they both know them, it's just not usually the same level. And I hear that my husband's a CFP, and so he's a financial planner, not at all in divorce. He doesn't actually do any of that. And even when he is working with both of them, oftentimes he'll say like, oh, only so and so showed up to the meeting today, or one of the spouses is just not as involved. And so it's not any reason or anything of the advisor even. It's often just kind of what you've done.
Yeah.
So, and I think the other thing is that, that I'm hearing from you is that a client then could work with you for the divorce and then still go back to their financial advisor
Yeah.
to continue on, right? So I imagine you have relationships or can have relationships with financial planners and financial advisors because you're not taking over their role, I guess, right? Is
Right.
that correct?
That is correct. Absolutely. What I will help the couple with is, and there are a couple different ways I can represent, and we'll get into that later as well. But if I'm working with a couple, with both parties, and we're working through the division of assets and all of those, the retirement accounts, the taxable accounts, the trust, et cetera, et cetera, et cetera. When we get to that point of, okay, this is what both parties have agreed on feels fair to them, because nothing happens unless both parties are in agreement in this case. And so once then that occurs and they know, like, this is what my financial future now looks like, this is what my resources are, they're going to be different than what they had before. And so they need to then go on and probably do the financial planning with their financial advisor. And so they can absolutely just return to that relationship. The paperwork, the reports that I produce will help the financial advisor kind of put the plan together, and then they get a better sense of what sort of changes they might need to make, what sort of lifestyle changes, assumptions, savings, what goals may be less attainable, or maybe now they want to reduce their goals. That travel might be, cut in half, or you're doing it less frequently, or whatever it may be, because you're not traveling with your spouse and maybe your whole family all the time.
Mm-hmm. Yeah, I think that's a good point. And I think that it's a way to have clients realize that it's not replacing that relationship,
Right.
but it's in addition. And it's,
Right.
it's for the divorce process to be able to dive into it deeper. And oftentimes, I don't know if you see this, but I definitely see that their advisors are able to provide a lot of information still, right?
Yeah.
So they may be able to go to their advisors and say, hey, can you pull a balance sheet for me? Or can
Sure.
you, let me know I need these account information. And so you can utilize the information that they may have to make the job easier, whether it's in mediation or whatever, wherever you're doing that. But you're adding on to what they can do.
Yeah, that's right. I mean, obviously I can look through a statement and figure out, what the amounts are. Usually statements, they're not required to have tax basis when that exists. And so, when you're looking at how to divide up assets properly, it's important to take into account things like cost basis. And because you don't want to trigger a lot of taxable gains, you don't want to stick one party or the other with all of the taxable gains. There are a lot of nuances to the financial division that really should be taken into account, that being a financial professional first, that background really helps. So yes, a financial advisor could help maybe with providing the statements. If there's any sort of situation that might not be readily apparent by looking at the statements, they can certainly provide a lot of color on it. And for the client, sometimes they just maybe want to have that, they've got a lot going on right now to process emotionally. So the ability to just take the finances and say to their financial advisor, please just send this off to the CDFA, and they can kind of let themselves out of the loop right there and focus on other things.
Mm-hmm. Yeah, I think that's very true. So I just want to, just a small thing, but something you said that I think people don't always know is you brought up cost basis or tax
Right.
basis. Can you just give like a quick explanation for anybody who might not know what you mean by that?
Sure. So in a taxable account, for instance, if you have like a family trust and 10 years ago you bought Apple, you're going to have a tremendous gain in that now. So if we had to sell it, or if somebody wasn't paying attention to the fact that there were such great of an unrealized gain, they might suggest that you sell that, which would potentially cause a big tax bill. And if that all occurred on one party, if let's say the wife was granted that Apple stock, now she has to pay the tax on it. And so really what she's ending up with at the end is a lot less than what the agreement had been. So taking a look at the tax basis and the unrealized gains, the growth that has occurred but not been recognized yet because the stock has not been sold. It's just, there's a lot of tax liability that could be hidden in an account. Now, with retirement accounts, it doesn't matter because you pay ordinary incomes. The growth on those assets is tax deferred in the case of an IRA. or tax-free in the case of a Roth IRA. So those aren't as critical, but certainly if there's a family trust or taxable account, if there's a lot of investments there that have, been in existence for a long time or had a significant gain, it could really make a difference when you're looking at the final scenarios for the asset division.
Yeah, certainly. That's a good point. And I think that's, that right there is one piece of why, whether you're in mediation or whether you're litigating, working with a CDFA, working with somebody who has that financial background, the attorneys are not always going to understand or realize how they should be looking at that, right? And they may just be looking at it as, oh, well, this asset is worth this much and this asset is worth this much. But when you really drill down to kind of the deeper part of it, the tax issues and the other things that go along with it, certainly there are some attorneys who I think have that knowledge, some who've even done their CDFAs, kind of like I do as a mediator, in that I don't work like John and you do as a CDFA, but I have that education and knowledge to be able to help clients where I can, and also know when they need that additional help. And so to that point, I know you brought this up a little bit before, but kind of talking about the difference of how you might work with or represent clients, right? So there is, brought up the term of like a financial neutral, or if you were maybe a financial advisor, still in the CDFA role, but an advisor for one of the parties to the divorce. Can you explain a little bit about the difference there and what that looks like?
Yeah, so the whole role of a CDFA it's newer and it's not generally as well known by the other professionals out there. So I've been spending a lot of time just educating other mediators and family law attorneys and therapists. So I'll have clients that come to me just directly. They find me through my website or word of mouth, and they'll approach me. Sometimes they're in, it's an amicable relationship and they've decided on a lot of things, maybe child custody schedule, all sorts of things, but they just don't know the right way to divide assets. They don't understand the separate property and community property and some of these nuances that are really important to get a fair settlement. Sometimes maybe somebody is proposing a settlement that might not be in the other's best interest. And again, this comes into play where there's often a mismatch in education or financial knowledge about the couple's assets. And sometimes it's an innocent mistake. Somebody believes that they have separate property when it is now, in fact, community property. But I'll have a couple that comes to me. They just need to figure out how to do this fairly. So we gather all of the, 3 months worth of investment statements, 3 years worth of tax returns, bank statements, all of these, Social Security. If there are any privately held businesses, we have to get those valuated or have an agreeable, business valuation. Pensions, things like that need some valuation help. And then we can just work through the different scenarios with that couple. I create probably 6 or so different scenarios, and we just keep getting closer and closer to what feels right for both of them until they're in agreement. In some cases, I'll have a couple come to me and they kind of have some of the financial agreement already in place. I had a couple who, they had decided that he was going to keep this amount as kind of a separate property amount, and then everything else they were going to split. And this was the scenario where he wasn't quite clear on what the separate property truly meant. And so I was able to educate both of them on the fact that this is not truly separate property. It is community property. But if you're both in agreement that this is the way that you want to divide it, you have that ability to have that give and take. Maybe it just made sense for the other spouse to move on and not have that person in their life and have a shared property that's going to continue to, have checks come in her ex-husband's name, and she just doesn't want to see those anymore. In some cases, I'll have a therapist refer either a couple or an individual to me, or a mediator for that matter as well sometimes. Sometimes one party chooses representation of an attorney. I always recommend that both parties have an attorney just to kind of go over the final details and make sure that everything looks correct. But sometimes I'm asked to come in as kind of an advocate for one side. And so a case that I'm going to be working on shortly, just getting underway, a couple who's dividing their assets and trying to figure out the fair way to do it. The other party, she has a financial advisor that she's working with, and we'll see how that goes. And my client, is not the educated one on the finances, and she just needs the help of what is fair. And so I'm going to work with her just to kind of prepare all of her forms and documentation, all the things that need to get filed with the court, the form 140 and 150 and 142, get those ready so that she can just keep up with the filing, keep up with the process. And let's see, in some other cases, for instance, I'll work with a family law attorney directly. I work with somebody in Florida, for instance, who she just has me do all of the financial analysis so that she can focus in on the legal aspects of the case. She just wanted to kind of streamline her business and not have to deal with all of the form gathering and the data entry and the analysis. So I do that work for her, and just work kind of with her clients and her on getting everything together for them.
Yeah. So to me, it kind of seems like the difference being that if you're a financial neutral, like I am as a mediator, I would, I wouldn't represent either of the parties. I work with both of them, neutral, right? Like not giving advice just to one. And yes, exactly. Versus if you're working as an advisor, now I know you're not an attorney, but it's kind of that instead, right? If we're comparing mediator and attorney to like financial neutral versus financial advisor, I see it kind of in that role that like you're either able to advise just one individually and work with them on what's going to be best for them financially, or you're looking at the whole picture together as a financial neutral and saying, okay, well, how is this going to be the best scenario for everyone involved? Is that kind of okay?
Very nice summary, Amanda. Thank you.
Of course. And I think that sometimes I think a lot of the times you might have one or the other, right? You might have a financial neutral, or you might each have your own advisor. But it's also possible that there can be some cases, especially ones that may be more financially complicated or more litigious even, but they still want to have some working, where you could potentially have both. Is that correct?
That is correct. Yes, I could be kind of serving as the financial neutral, and both parties, or one party or the other, through their attorney, has decided to hire a forensic accountant to work through some particular either business transactions or other spending sort of situations that they need to work on uncovering. Or both parties might have a sort of additional financial professional that's involved. So I can work either way, either as a neutral with one side or the other, or I can be on one side, kind of providing information to a financial neutral as well. There are all sorts of different arrangements with mediation. You and your clients are trying to work together. I'm kind of that same role, like you said. And then also the collaborative law practice, where there are two attorneys, one representing each client. The agreement is, the premise is, we're not going to go litigate this in court, but we need to kind of get this, everybody works together as a team and try to do it transparently. And that's where the financial neutral role is, again, very important, because it's almost that role that drives a lot of the discussion, really kind of informs both of the attorneys, who in turn are, educating and informing the clients and trying to come to an agreement.
Yeah, certainly. Well, and I think that's, helpful for people to understand how you can have those different roles and to understand what each person needs, right? I find that in some mediations, when I work with couple, like one I'm working with right now, it could have been a financial neutral. They're working with the CDFA, but more so it was that wife really needed somebody to advise her and help her through it. And so, we decided more, but husband's not going to have someone, not because he couldn't, but he just didn't feel the need to as much. And I think that, I have some situations like that where one may and one just may feel like they're going to kind of more do it on their own because they don't need that, advice or assistance. Other times I see it where they might just, as you were talking about, need more help with maybe their income and expense side. So to understand what is the support maybe going to look like and understand their expenses, and especially for somebody who maybe never handled the budgeting and the expense side of things, can be helpful to, have a professional to work with on that.
Yeah, absolutely. And let's go back to that budgeting in just a second, but I wanted to first touch on something you had said about where maybe one party wants that extra, set of eyes or something. And this gets back to that more financially savvy spouse. Maybe they have an agreement in principle, but what happens obviously with divorce is that a little bit of mistrust creeps into the relationship. And so if somebody's proposing to you, this is a fair settlement, you're not trusting of them right now. So you want a third party to kind of just take a look at that agreement and go through it and say, yes, this is reasonable, or maybe we should look at some alternative scenarios to see what else we could do with this to make it a little bit fairer.
Yeah.
When you're getting to budgeting, that's a big part of my role as well. So when we are gathering the information on income and expenses, so we're looking at all of the household expenses, mortgage, homeowners insurance, taxes, et cetera, the utilities. And then we're also taking a look at just different spending habits, vacations and different things like that. Clothes for the kids, kids expenses that are shared, such as tuitions, or and depending on where this couple might be in their separation, maybe somebody's living now in a rental, and so they've got this additional rental expense that's going on, and they have additional utilities and et cetera. So budgeting really and getting those expenses right plays a lot into the support calculations. But then it's also really important as somebody's going through their divorce to kind of update their budget expectations. Again, the resources have changed from when you were a couple. I mean, it's impossible for a couple separating to really be in better financial situation than they were before. Ideally, it's almost a match, but they're not going to be in better shape for it. So you just need to kind of reassess all of those expenses and figure out maybe where you can start making a little bit of a change here and there. And if you make, just a handful of those little changes, it can really add up to a monthly difference and then an annual difference. And it just makes a big difference. So sitting with a couple and helping them reassess maybe some of their expenses, trying to figure out where some reductions can be made is a big part of what I can help with as well.
Yeah, I think that's really, really important. And a couple things I want to touch on is one, the idea, for people who may be going through a divorce already, you might be working on this or know this already, but the idea that, especially here in California, and I think every state has it to some extent, but in California, you are required to do financial disclosures. So legally, each person is required to disclose all of their assets, their debts, and then their income and expense. And so that's where, when we're talking about kind of the budgeting side of things, is being able to fill out or complete, what is your expense side of things.
Yeah.
And then, to what you said, yes, it's very important. I think that oftentimes, people come in and they think, okay, well, we're going to go out and we're going to have two households, and don't always think about, okay, well, can you maintain two households? And I think that, what I usually say with clients is it's very rare that clients have enough money, excess money monthly, to maintain two households at the standard of living that they were living at while they were married. Now, it's not impossible. I certainly have clients where there is enough extra money, or they've saved, that they could do that. But that's the small minority, I would say.
Yeah.
And
especially in California.
Yeah, exactly. Especially, I mean, I'm in San Diego, and John, I know you're up in Santa Barbara.
Right.
And, those are both very expensive areas to live in.
Yeah.
And unfortunately, I think only getting more expensive. But just the idea that, I know that a lot of times when people come in, and this is kind of a legal term that people come up in with, is the standard of living during the marriage, right? To be able to figure out what support is, to be able to have that standard. And one of the things that I think is the most difficult conversation sometimes is people just realizing, if there's no more income coming in, right, then we can't, we can't have these two budgets at the level you had before. And so then it's a conversation of, well, where is that money coming from, right?
Yeah.
Is it that one or both people are going to need to have a change in income and increase, that? Is it that there are ways to have unearned income, right? Is there, large accounts that could, pass off income to the clients, or are there savings that might need to be used? Or, like you said, most importantly, are you cutting down on expenses? And so I know a lot of times the conversation I have, and trust, I'm fairly certain that neither of the clients enjoy this conversation when I'm like, there's just not enough money, is the idea, exactly, it's very difficult, but it's the idea that both parties should be in a similar situation, right? So
Yeah.
I always say it shouldn't be that, the supported party, the one who's receiving support, should have so much that they can live comfortably as they were before, and the other spouse can't, or so
Right.
little that they can't and the other can. And so
Right.
it's kind of figuring out where is that ground where we're dividing up the funds that there are,
Mhm.
and it may not be enough for either of them, but if you're going to have to find other ways of doing it, either dipping into savings, cutting expense, I guess I shouldn't say either, it's all of them usually, right? It's a combination often.
Often, yeah.
Yeah, that they are both having to do that. And I think
Yeah.
it's also sometimes, though, the conversation that they may live at different levels in a sense, right? So I have to have that conversation in mediation of, each of you get to decide how you spend your money going forward. We want to make sure that there is enough in the sense that each of you have a similar amount that you could use. But beyond that, one party may choose to live in a smaller place. One may choose, is how they spend that money.
Right.
But I imagine that those budget conversations can be very difficult
Yeah.
to go through.
Yeah, absolutely. There's just so much going on when one is going through a divorce. And a lot of it is that emotional component. You're kind of walking around in a fog and you're somehow functioning at your job and you're doing things, but you're not really acutely aware of every step of it. You're just kind of getting through. And so to start dealing with the idea of budgeting and how now, after this judgment, your situation is changed. It's just really hard to kind of grasp that sometimes. And so the exercise of going through kind of step by step, like what are the expenses, and like you said as well, because income as well. Is there an opportunity to increase that income in any number of different ways? Either are there raises that are available, or is there upward mobility in where you are? The family house is a huge thing, obviously, that a lot of, I'm sure you spend a lot of time dealing with the issue of how are we going to deal with the house, and especially if there are kids who are still in school and living there, and trying to figure out, is it possible even for the one or both, either of the spouses, to refinance, given the lending standards and how much you have to have as income and all of those sorts of things. So there are a lot of conversations that kind of, the sooner those get started, the better. The more people are focused on, there are definitely going to be these financial changes, and this is possible, and this right now is a stretch, and just resetting their expectations. It just is helpful. The more that you can get taken care of early on.
Mm-hmm. Yeah, I think that's a very good point. For anyone who is trying to kind of figure out how to do their expenses or budgeting, do you have any tips or where to start?
Yeah.
If somebody's starting to think about that.
Yeah, I would say, first of all, don't look at it as this massive project where you've got to comb through every single bill and find down to the penny what you're spending. A lot of us do auto payments, and so your credit card statement might have a lot of your expenses already on it. Your Netflix, your cable company, your possibly your mortgage, car payments, all of those sorts of things might be on there. So if you just kind of go through a monthly credit card statement, or all of your credit card statements for 1 month, you'll probably get a pretty good sense of what those expenses are. And of course, I provide a form. You have a form that helps them go through, line items of different expenses that maybe they hadn't thought about, but when they see that in print, they go, oh, I do have that. I do have an insurance premium that I'm paying every month that I should put on there. It's $50. It gets auto debited. I don't even know where that comes from, but now that you mention it, yeah, I have that. So I think the credit card statements is probably a really good place to start. And then, the tax returns might be helpful a little bit as far as, just kind of seeing the income from there. It's not going to really help you with the expenses so much, but that's something that I'll take a look at. And, again, we can have the conversation. I can say, does this feel like everything? And of course, as we're preparing those financial, the documents, the financial affidavits and statements, I'm going to run those by the client and say, does this look right? Did we get everything? Did we miss something? As they look through it, they're going to say, oh, I forgot to include this, or this amount's wrong, or whatever it may be. So,
Yeah.
And then you can always estimate if you know that you're paying something, but you can't find exactly what it is. You can estimate. You can say this is an estimate. And there's a box that gets checked on that form to say as such. So the goal is to just try to get the better you can represent your own finances, the more complete that form is, and the better the spousal support or child support calculations are going to be from that.
Mm-hmm. Yeah. And I'd like to, one of the things that I like to do with clients too, is I always say to them, like, and I don't know if you do this, but like, if you're doing your first pass at a budget, don't think about what you need your budget to be, like cutting things out or reducing down costs. I always want that first pass to be, think about everything that you may have, or you either have now or you may have going forward.
Right.
And then the next step is looking at it and figuring out whether that budget can be met or whether there's places to reduce it. So I find sometimes it's less stressful on people if they can just think about, okay, like you said, estimate or anticipate what your needs are going to be. And then we can go through and, they can work with someone like you or look through their budget and figure out, okay, well, how am I going to now change this budget if the support is just not going to be there, or my income is not there. Right.
Yeah, exactly. Yeah. And then support is always negotiable, right? So you can always go back to, if one of you find yourself in a much better place, or for that matter, a much worse place, it could be temporary, it could be potentially long-term. You can always come back to the mediator, to the courts, and refile the paperwork and say, I think that, we should talk about how do we equalize this given this new reality.
Mm-hmm. Okay. Yeah, certainly. I think that's a good thing to consider and know as they're going into it. So one of the things I wanted to touch on before we kind of wrap up today is, we've talked about how you work with clients. We talked about kind of difference between neutral and financial advisor. But one of the things is, I know that clients, I think, not all, but a lot of financial advisors, when they charge, they're charging based on like an assets under management or a flat fee to do a plan. So how does it differ? Like for CDFA services, how do you do your fees? And I know some CDFAs are going to be different, but for you, how do you work with, or how do clients work with you on that end?
Yeah, I work on an hourly rate, and the CDFAs that I know and spend time with, also an hourly rate. Sometimes they'll just kind of get to a set, project rate. This is kind of how much it is for. It really comes down to the complexity and the amount of time you're going to spend trying to figure out if there are multiple businesses or properties in multiple states that are, deriving income. It can get really complicated. And so that's just going to be a more expensive analysis. But I think finding a fair hourly rate, and then just the time that it takes. Generally speaking, a CDFA is not going to take as long as like a forensic accountant to go through material. So you can probably utilize a CDFA for a lot of stuff. And maybe if a forensic accountant is needed, bring them in for just that portion. A CDFA is probably going to have similar to a less of an hourly rate than a mediator. And that's another point to make, I think, as well, is, the traditional divorce situation is you both hire an attorney and you work through it. It's going to cost a lot of money at the attorney's rates. With the CDFA, with the mediator, you have an ability to kind of pick specialists to work with you in certain ways, and they can work together. So, Amanda and I can work together. She's helping the process along, and she's being that neutral third party to move you towards that agreement. And I'm coming in with the financial part of it. It's all coming together, works together. We might co-present in the same meeting, or we might kind of handle, different meeting times with the clients. But in the end, the goal is to kind of efficiently, how best to efficiently spend the money. And so working with an attorney is generally going to be more expensive than working with even a mediator and a CDFA to go through. And hopefully, our goal is to have that outcome much more positive for both clients.
Yeah, certainly. And I think that even if you are working with an attorney, utilizing a CDFA
Yeah.
still can reduce your attorney costs, right? So
Right.
in the same way that like in mediation, it might be that the costs that you're paying a mediator are going to still go down because you're using a CDFA. And yes, your overall cost might be higher than if you just use one professional, but
Mhm.
not always,
Yeah.
because if they're not as productive or they're not able to get through that information in the same way, then utilizing the professionals for what they're good at is going to
Right.
be the best way to kind of keep those costs down and have the right professionals and make sure that
Right.
you're getting the information that's necessary in those scenarios. So I think that's a
Right.
very good point.
And
And
attorney's going to
yeah,
probably utilize their paralegal for the financial part of it. And so somebody who has limited financial knowledge doesn't know necessarily what to look out for. They might take a look at those retirement accounts and just say that let's divide everything in half. And so, with these retirement accounts, you've got to do a quadro. There's a fee for that. There's all sorts of
yeah.
things where your bill can get higher by just inadvertently missing some of the places that you can save a client money.
Yeah, I think that's a very good point. And good for people to think about as they're, going into and through the divorce process.
Yeah.
And, I think lastly, what's important to know is, I believe, just like like I said, we're located in San Diego, but we work with clients all throughout California,
Right.
in the divorce process mediation. We're doing still a lot of it by Zoom, although we do have a physical office in San Diego. I
Right.
imagine for you, similarly, you can work with clients, maybe even potentially not just within California, but it doesn't matter where they are
Yes.
physically located, right?
Yeah, that's right. The software package that I use, it adjusts. It has all the different states' requirements for spousal support for their, whether they're a community property state, or all the differences that can be there. The software takes that into account, so I can work with anybody in any part of the U.S.
Yeah, that's great to know. So, well, John, thank you so much for speaking with me today.
Thanks, man.
Again, I spoke with John Duffy, and John is with Zen Divorce Solutions. We'll put your information, link to your website and everything on our website, as well as in kind of the comments. And I'm always bad at this. I realized I didn't introduce myself at the beginning, but I'm Amanda Singer, and I am one of the owners of West Coast Family Mediation Center. And I am also, as I mentioned, a CDFA. I'm also a licensed attorney, and I work full-time as a mediator. So I'm often working with other attorneys, other CDFAs, and making sure that clients have the correct professionals that they need. So if you have any questions, we're happy to answer. And like I said, we'll include all of the information where you could reach both myself and John in the comments. So thank you so much, John.
Thanks, Amanda.